Okay, got some couple interesting articles and news pieces about decentralized finance and from the centralized world of all places, right? But this is kind of what, if you've been in crypto for a few years, was kind of anticipating. First, obviously, Bitcoin CME futures launching, and their goal was to keep a lid on it, suppress prices for a couple of years, which they did successfully, right? And ETH futures launched, I believe, in is it April? I'll take a look in a while on TradingView, but I think it was April, coinciding with our local top. Was it a major top? We shall find out in due course, right? But DeFi, this is what I'm involved in through hex staking, right? Hex staking is essentially yield farming. You are doing your own work. You're essentially owning a crypto business, a crypto farm, essentially. That's one way to kind of link the whole physical world back to what we're doing in Hex, right? And so let's have a quick look at, these articles. And here we go. This is fresh off the press 2 hours ago on MSN Money, Microsoft Network, right? From Business Insider, Harry Robertson, literally 2 hours ago. So the title is Upgrades to the Ethereum network could turn crypto staking into a $40 billion industry by 2025. I believe Hex is already at $44 billion by itself. And then you got Throne Aave, Compound, all the others, right? And if you look on DeFi Pulse, which doesn't list Hex as total value locked, but there's certain different sectors to DeFi. There's the DeFi asset, there's the governance, and there's like 3 or 4 different categories, right? So here we go. Ethereum network upgrades could help the crypto staking industry boom to $40 billion. JPMorgan says, and remember Jamie Dimon demonizing Bitcoin a couple of years ago. So they always push you one way and make you look in one direction and quietly go about investing where they into disruptive technology. Otherwise, this disruptive technology is aimed directly at them, of course, right? The banking industry. So it could also see Coinbase earn around $500 million in revenues in just over 4 years' time. So previously you couldn't gain yield on Coinbase, but now you can. I believe it's like 6-7%, right? 6-7%, and that's on a risky asset. I'm not too sure what they pay on stablecoins. So I think Doge they just listed, and I think that's like 6.7, something like that. Ethereum is currently overhauling the way validation and rewards are carried out on the network. So that's ETH2. ETH London just launched, and so it's as Vitalik's own words said, it's not a set date; it's an ongoing process, right? Ethereum is consistently evolving over time. Major upgrades to the Ethereum network could help turn crypto staking. Yep. According to analysts, so you got JPMorgan, a major bank, US bank, having analysts look at crypto markets and DeFi, right? The staking industry, in which users earn cryptocurrency by putting up their own tokens to validate transactions, that's basically proof of stake, is currently worth around $9 billion. Said in a note on Wednesday, but that industry could grow to 20 billion after the Ethereum network moves to a staking system, likely within the next year. We'll see. Software is hard, right? And delays are often likely. So this could boom to 40 billion by 2025, providing opportunities for crypto holders to earn a reliable yield, JPMorgan says. Worthington and his team also said they see Coinbase potentially earning $500 million from staking. Okay, this is Jim Cramer's thoughts. We see staking as a growing revenue stream for cryptocurrency intermediaries such as Coinbase and source of income for retail and commercial owners of cryptocurrencies utilizing the proof of stake protocol. So they're kind of behind the curve, right? Because if you use Celsius, it's kind of a halfway stepping stone to full-on DeFi. You basically are relying on the trust of the company, the Celsius company, and to custody your crypto assets, and they on the back end generate a yield to pay your interest. But proof of stake on Ethereum, which I don't think an average user will actually be able to do, because it's basically essentially a job, right? You're going to have serious computing power to put up your 32 ETH, right? The opportunities to earn will grow meaningfully with the Ethereum merge anticipated for later 2021, which will boost the size of the proof of stake ecosystem. Developers plan to shift the Ethereum network, which runs the Ether cryptocurrency, from a so-called proof of work, which relies on graphic cards mining, to a proof of stake system towards the end of 2021 or early 2022 as part of the ETH 2.0 project. Okay, so yeah. Anything else? We see the ability, this is from JPMorgan analysts, we see the ability to earn a positive real return as one of the factors driving the cryptocurrency market to become more mainstream. This was kind of a concept a few years ago that was just looked at in puzzlement. The actual user receiving tokens on their tokens, right? However, the analyst said there are risks. One that is staking locks up a user's cryptocurrencies holdings for a period. So yes, you got to make sure you are in the right product and not a project, right? DeFi summer showed that to be the case, right, with all the rug pulls, and they still continue, right? The rug pulls still continue. So prices could tumble, but the user would be unable to sell. Another is that users could fall victim to fraud if staking on unreliable networks. So true, so true. Okay, so this article is done, and so they don't even list what kind of projects to take a look at. So it's just kind of broad news piece, right? Basically, maybe promoting JPMorgan and Coinbase. So there you have it. And this was a few days ago. This is by City AM, I think, which is is that a British organization, news network? Could be related to futures or something, or some sort of trading. Institutional investors and regulators hold financial technologies to rigorous standard. That approach largely informed institutional interest in decentralized finance technologies through the end of the last decade. Oh, interesting. End of last decade, what, 2019, eh? In the last year, however, institutional engagement with DeFi has grown conspicuously through investments, partnerships, and their own in-house blockchain projects. Organizations such as JPMorgan and Goldman Sachs have embraced and lent new credibility to the world of DeFi and Web3 applications, or dApps, right? As we know them in crypto space. Below, we explore how the institutional approach to DeFi has evolved and some of the organizations at the vanguard of that evolution and how they might try to deploy these technologies. So these old school banks, they will deploy DeFi in a way that obviously boosts their bottom line first and then the users second, right? They will put up some economic gates, right? It's hard to, leopard can't change its spots, right? So that's kind of their kind of move. They have to get involved because of how disruptive DeFi is. Because why have a CEO, a board, and directors, and fancy offices in Manhattan and London, Frankfurt, if a user can just do all this work by themselves, right? So institutions quietly followed this space for years. Then they made their moves. In late 2019 and early 2020, researchers hired by Fidelity Digital Assets surveyed nearly 800 institutional investors across the US and Europe about their attitudes towards digital assets in general. Though these investors have historically remained on the sidelines because of the perceived risk inherent in digital assets, Fidelity writes more than 1/3 of respondents, 36%, said they were currently invested in digital assets. Wow, that's a huge number, 36%, right? That's up from 22% from the previous year's survey, an increase of 64%. That 64% jump is best understood as an indicator of wider interest or wider trend, obviously, right? As a general rule, investors get acquainted with DeFi after first exploring digital tokens as an asset class first, right? So Bitcoin is the gateway drug. And once you own Bitcoin and experience what holding is like, it's not that easy, right? You kind of start exploring ETH, and then which will lead into DeFi. This is all bullish for products like Hex, right? That is the gateway conversation that eventually leads people to engage with concepts such as disintermediated financial markets. Institutions followed that same path. Here we go. And 2020 appears to have been that year in which institutional interest tipped towards committed, genuine engagement with DeFi apps. That is the larger story behind a 64% jump in Fidelity's year-to-year survey results. Okay, fast forward to the spring of 2021, with that has just passed. And you begin to see funds, trading firms, and centralized yield platforms providing the bulk of the liquidity in the DeFi market. Josh Greenwald, head of risk at Uphold Asset Management. I actually haven't used this, but I hear good things, maybe. I don't know. They have an app on the App Store, right? As the total value locked TVL and DeFi tracks towards 50 billion, and with 40 of that 50 entering since early November of last year, it's evident that the market has evolved beyond hobbyists and early adopters, right? This was a concept a couple of years ago that, like I said previously, people didn't want to lock up the funds. People didn't understand the whole concept of DeFi, right? Of course, institutions know to temper their expectations when money starts to flow this freely. After all, there's not been a significant test of the resilience of major DeFi protocols nor their systems as a whole. So, like DAI, the stablecoin, I think during COVID, or was it the previous crash, it suffered a lot of liquidations, right? DAI is a stablecoin, collateral backed. It was just Ethereum at first. So when Ethereum tanked, it caused users to have to lose their some of the Ethereum, right? No good. So that's why they added USDC, I believe Tether as well. Definitely USDC to the collateral to give some stability to the collateral, right? Oh, here we go. DM Association, isn't that Facebook? It's not clear what will happen to interconnected protocols when one or more of them experience serious market-wide price dislocation or large-scale technical outages. Yeah, that's why how ETH progresses and builds is still critical, right? If they have a major failure, could be bad days, right? So that's why Ethereum moving slowly is actually good. I think they understand how much all this is interconnected, right? Cautious optimism guides their approach today. While institutional investors are clearly interested in DeFi, they are still just beginning to understand how they could deploy these technology themselves. Yeah, they want to bring it in-house rather than being public and open, they want to bring this in-house and brand it with a JPM DeFi badge, right? In May 2021, ING's blockchain lead Marina Gomez de la Villa told a CoinDesk Consensus 2021 audience that the bank is attracted to the opportunities to attract innovation in order to create new asset classes. Oh yeah, banks love to create new things, new paper markets, mortgage-backed securities being the devil that we know so well. Paul Brody, who leads EY, that's Ernst & Young, the accounting firm or auditor, global blockchain initiatives, I think they were building on ETH years ago, right? Compared DeFi's development today, where cloud storage was in 2006. Wow. So you got a decade of explosive growth ahead of you for you early guys, right? In the same way that cloud storage could suddenly give a startup infinite storage capacity by plugging into an existing application, DeFi did the same for financial operations, he wrote in June 2021. Want to buy and sell in dollars? Stable coins can be used anywhere. Want to set up a lending operation? You don't need to build your own stablecoin because you can use any of the digital currencies already out there. Yeah, that's true. It's worth noting that Brody published this piece just a couple of weeks after EY announced a fresh $100 million investment in its own blockchain R&D. So yeah, like I said, all these major firms know the potentially disruptive technology of blockchain and DeFi. So, but they need to defend their own interests and stamp their own brand upon it, right? Everyone is learning and building out their capability. Some organizations, however, are further along than others. Free to watch, JPMorgan. And so, yeah, bit of a long video. I haven't seen this, but may take a look later. And this is on Bloomberg as well. In April 2021, blockchain engineering company Consensus, which basically funds Ethereum and owns Ethereum, announced Vitalik, right? Announced a $65 million funding round, whose investors included JPMorgan, wow, MasterCard, and UBS, which has its own $200 million fintech investment portfolio called UBS Next. JPMorgan's involvement was particularly noteworthy because that company already had a strong relationship with Consensus. Yeah, they do. In 2020, Consensus acquired JPMorgan's enterprise blockchain platform Quorum. Consensus continued to offer software support and services to JPMorgan's Quorum projects. Wow. Today, JPMorgan's in-house blockchain projects fall within the Onyx portfolio. Yeah, never heard of that, but okay. Onyx portfolio. Ongoing projects include LIINK, Link, not to be confused with Chainlink, a blockchain-based network built specifically for institutions, and JPM Coin. I think JPM Coin is just a dollar stablecoin for, to move funds between the internal banking system, right? I believe. Goldman Sachs, in May 2021, Goldman Sachs led a $50 million Series B funding round for Coinmetrics, which provides blockchain data intelligence to institutional clients. So yeah, these guys need to be brought up to speed, right? A lot of these old legacy analysts, I'm sure they're out there hiring young guys who are familiar with this stuff. So it could be a good opportunity for you guys already in the banking system, right? A month later, the company participated in a $28 million funding round for Blockdaemon, which helps build institutional-grade blockchain infrastructures. These two deals are clear indicators of where Goldman Sachs is pivoting part of its global strategy. Yeah, remember a few years ago they were talking about having a crypto trading desk. That relies on work, doesn't it? But getting into this DeFi space, that's a money maker, right? Let the money rain down. More recently, the bank expanded its crypto trading desk, catering for the increased demand from key institutional clients. Why can't the institutional clients do their own trading? I guess they see Goldman Sachs never losing any money in the old system and figure they'll do the same in the new system, right? This increased client demand has taken Goldman Sachs in a new direction as the bank expands its execution, advisory, and investment functions within the sector. I wonder who's the head of CEO of GS now. Is it still Blackman? I'm not too sure. What's different today is the extent of institutional interest coupled with very strong demand across the wealth management franchise. Again, franchise. Matthew McDermott, global head of digital assets at Goldman Sachs, noted in the company newsletter published 21st of May. The product offering is broader as people are looking beyond Bitcoin. Yeah, this is why I kind of predict Bitcoin in the next decade, its dominance could be down into the teens, maybe like 15%, I believe. That's the general trend that is hard to fight. It will still play an important role as the collateral for all of this that is built around it, right? As the potential of the underlying blockchain infrastructure to transform the way markets behave. Yeah. So everything's going to be tokenized, right? Essentially, everything's going to be traded and be able to move 24/7, 365. This is going to be amazing for wealth generation and freeing up new markets, right? New markets around the globe. So I'm very bullish on this decade, even though there's some crazy stuff going on. Overall, this is going to be, I believe, a booming 2020. So roaring 20s. Bank of America. And we're already like 2021. So yeah, it's good times ahead. Bank of America. This might be a surprising inclusion as Bank of America has historically been one of the most crypto-adverse institutions. That said, the company now owns more than 60 blockchain-related patents. CEO Brian Moynihan mentioned in May 2021, 60 blockchain-related patents, eh? That same month, Bank of America announced it had joined the Paxos settlement service, Paxos, which has a stablecoin, and also Paxos, which provides Pax Gold. It is a gold token, which is a redeemable gold token. So I think it is vaulted gold in Swiss or Singapore banks, I believe. So yeah, do your own research on Pax Gold. Yeah, interesting. I think that's only I would use that rather than US Tether version of gold, right? Paxos Gold. Though Moynihan is on record saying Bank of America has not found a use case at scale for blockchains, his team is clearly looking. So I guess they're exploring, making patents and not actually building anything right now. Institutions still have serious questions. Citigroup also made news this past spring when the FT, Financial Times, reported that the company was looking into launching a variety of crypto-related services. Two things stand out. First was the lack of specificity. I think Citigroup and Bank of America are falling behind, right? Citigroup did not commit to any projects, plans, or directions in that report. Yeah, this could be bad for Citi stock, could be bad for Bank of America stock. If you do own American banks, JPM, Goldman Sachs seems to be the way to head, right? If you want to support the old guys. Second was how frequently Citi executives try to temper everyone's excitement about the news. I believe that crypto is here to stay and that we are just at the very beginning of the market. Ite Tuchman, Citigroup's global head of foreign exchange FX market, told the FT This isn't a space race. Yep, ish. But you're going to be losing ground on JPM, right? There is room for more than just one flag. True, again. But the bigger your competition gets and the lead time that it has, it takes more time for you to catch up. And if, like I said, Consensus is teamed up with JPM, are they going to team up with you, Citibank? I don't believe so. Citi's pump the brakes approach underscores some of the questions institutions still have about decentralized finance and about blockchains in general. Those questions include whether DeFi offers a demonstrably different type of service than TradFi activities do. Who will stand to gain? That's the big question mark for these bankers, right? They're still trying to wrap their head around it, some of them. Who stands to gain or lose the most from a mainstream deployment of DeFi? Yeah, they're not too keen on users getting all the gains, right? Whether DeFi could or would replace or complement or exist in parallel to TradFi activities or not. What regulations will emerge in response to the maturation of DeFi question. The role of DeFi remains to be seen. James Pomeroy and Paul Mackle, respectively global economist and global head of FX research at HSBC, that's Hong Kong Shanghai Bank Corporation, wrote in March 2021. I think Asians should be adopting crypto more, right, than many Europeans, I believe, right? Singapore, South Korea, Japan, etc. So yeah, good on the Asians. They're making the right moves. They argue in their report that DeFi networks lack the speed and applications lack the trust necessary for mainstream adoption. Yes, if it's tarnished with all rug pulls and hacks, yeah, a regular dude on the street's not going to put his money to work, right? So yeah, that's why in some respect, some sort of stamp of approval with a brand from a local bank with a physical location is probably where the average person on the street is going to put their money, right? A key step on that path could be the upgrade from ETH1 to ETH2. Yeah. If this were to happen, more traditional finance activities within the likes of insurance, housing transactions, and lending could be disrupted, but the nature of how quickly and when will depend heavily on the progress on the tech front. Conclusion. Several institutional investors have publicly embraced the DeFi and begun to build out their capacities with the technology. JPMorgan, UBS, Goldman Sachs, Bank of America, and even Big Four accounting firms such as the EY are examples of recent investment into DeFi project portfolios. So they kind of seems like kind of taking a scattered approach, all right, making sure they have their fingers in the pie, unlike JPM and Goldman Sachs, who are going full force, right? However, it is important to emphasize that these organizations are taking cautious steps into the space due to regulation, resource constraints, being focused on managing their TradFi business lines. These type of organizations are throttled in their ability to fully monetize and build sizable DeFi divisions within their organizations, at least in the short to medium term. Yeah. So the stranglehold of regs is keeping them from fully investing. This has allowed smaller, more nimble corporates and institutions to effectively monetize the 24/7 DeFi sector in a more focused and less bureaucratic manner. Boom, there we go. From automated yield farming as principal to infrastructure investment through to operating outsourced treasury services in a higher yielding environment. Strong human capital and tightly risk-managed strategies can generate some very exciting opportunities. This includes you Haskins, right? Building a mini family office for your loved ones, right? And your friends. That's how you can leverage Hex, all right? As for the tier one banks and blue chip institutions, by the time they truly enter this market on a industrial scale, it will most likely be via acquisition to buy up the market share of those smaller firms that established their presence earlier. Boom. Appold, institutional DeFi inquiries have risen significantly over the past 3 months. From inquiries flooding in during late 2020 for Bitcoin treasury holdings, that's thanks to Michael Saylor pushing that narrative, to now going the next step in diversifying and safely yield farming those holdings on the DeFi networks. Yeah, you can get those Bitcoins you bought last year, wrap them up into wrapped Bitcoin and put them to work, right? Put them to work on Ethereum. A cautious and tightly risk-managed approach is an essential starting point in gaining traction in this growing frontier market. Boom. Shall we take a look at how JPM the stock is doing? Yeah, why not? JPM. Sorry for the noise. Got some building work going on. Let's zoom out. Area chart. Wow, all-time highs on JPMorgan. All-time highs on JPMorgan. This is actually a beautiful consolidation area. This whole the 2000s, 08, obviously devastation in the share price, but this point right here, this is when you could have been witnessing this economic energy exploding up, right? And was it economic energy or direct funding from the Fed? Who knows? But whatever, it did that to the stock price, right? It 4x'd it, all-time highs. But will DeFi bring this whole house crashing down? That is a good question, right? And okay, the noise next door is getting crazy, so I'm going to end this video now. Cheers, guys. Hope you got something out of it. Some certainly interesting developments in DeFi world.